All right, so today we're diving deep into the world of finance, specifically Prudent Corporate Advisory Services and their recent earnings call.
Fascinating stuff.
They've had a pretty amazing quarter, actually.
Yeah, it have.
So we're going to, unpack a bit what's fueling their success, what challenges they might be up against, and what it all means for you,
Right.
for those of us interested in finance and the markets.
I think what's really interesting to me is Prudent's strategy within the bigger picture of India's financial scene.
Right.
They're kind of riding this wave of a booming market,
right?
But they're also making some strategic decisions that could really affect their future in a big way.
Okay, so just to kind of set the stage for anyone who might need a quick recap, Prudent, they mainly work with retail investors in India.
Right.
Dealing with things like mutual funds, insurance, broking, that kind of stuff.
Yeah.
Pretty standard.
And their performance, this last quarter gives us a real look into, not just their own strategy, but the behavior of those retail investors.
Right.
And then just the dynamics of the whole industry.
Oh, totally. So speaking of performance, can we talk about that big milestone they hit?
Yeah. What's that?
They crossed 1 lakh crore.
Huge.
In assets under management. Not only did they cross it, they blew past it way ahead of schedule.
They did. That's a huge indicator of their success.
Totally.
It's got to be tied to the overall growth we're seeing in the Indian stock market.
Yeah.
But I think what's fascinating is it's not just about riding that market wave.
Okay.
They seem to be attracting a certain type of investor, the one who prefers actively managed funds.
Oh, interesting.
Yeah.
So they're not just passively tracking the market.
Right.
They're actually getting in there.
Exactly.
And making decisions about where to invest their clients' money.
Yep.
Interesting. And actually, only a tiny 2% of their assets are in index funds.
Right.
So that means that, almost all of it, the vast majority, is actively managed.
Actively managed. And so if you connect that to, the bigger picture, it says to me that they're targeting these investors who want, expert advice.
Okay.
That personalized service. It really fits with their whole business model as a financial advisory firm.
Absolutely.
Totally
makes sense. Now, they did mention on the call that they work with, all of the top 10 asset management companies.
AMC.
In India. AMC's in India. Is that a normal thing? Or is that something unique to them?
I think it's quite strategic, actually.
Okay.
By working with all those major players, they're giving their clients all these different investment options.
Okay.
Which helps them attract a really wide range of investors.
Yeah, makes sense. Cast a wider net. Get more people in.
Yeah.
Okay.
Mm-hmm.
But even with a red hot market, there's always going to be fluctuations.
Right.
And one of the analysts on the call brought up this really good point.
Oh, yeah.
How's Prudent handling these recent market corrections?
Yeah.
Especially, they were talking about segments like hybrid funds.
Right. Those funds that mix stocks and bonds. For people who want
a bit of both.
Yeah, a bit of both worlds.
Yeah.
A little risk, a little stability.
Exactly.
Well, it seems like Prudent's assets under management, or their AUM, dipped just slightly less than the overall market during the last downturn.
Okay.
Which suggests to me that they might have some risk mitigation strategies in place.
Oh, interesting. So they're not just, riding the highs, they're also prepared for the lows.
Exactly.
Now, on the call, they brought up a pretty big development.
Oh, yeah?
2 big AMCs, HDFC and Nippon, are cutting commissions on their existing assets, what they call their back book.
Okay.
Can you explain that to me like I'm 5?
Okay. Well, imagine you're a kid selling lemonade, okay? You make a deal with your friend to give them a percentage of the money for every cup they sell.
Okay, got it.
Then your friend decides to change the deal and take a smaller cut from the lemonade you already sold.
Okay.
Even though they already did the work to sell it,
Right.
So that's kind of what's happening here. These AMCs are reducing the commissions they're paying on assets they already manage.
Okay.
Their back book.
Gotcha. That's a really helpful analogy.
Yeah.
So what does this mean for Prudent and the whole industry, really?
This is where things get really interesting.
Okay.
Because when, 2 big players like HDFC and Nippon change their commission structure,
Yeah.
it kind of puts pressure on other AMCs
Oh.
to do the same.
Oh, okay.
It's like a domino effect.
Yeah, yeah.
And since Prudent earns some of their revenue from these commissions, this could really hit their bottom line.
Yeah, that makes sense. But they did say that they plan to kind of pass on some of these commission cuts to their network of distributors.
Exactly. That's them trying to protect their profitability.
Okay.
They're basically like spreading the impact across the chain.
Right.
Which is a smart move.
Okay. So, speaking of changes, there's this new regulation that's kind of like shaking things up a bit.
What's that?
The broker code changes.
Yeah.
Which make it easier for investors to like switch advisors.
Mm-hmm.
Now, that sounds like it could be kind of threatening to Prudent's business.
Yeah, but that's what's so interesting. Yeah. They actually see it as an opportunity to get new clients.
Oh, okay.
They're not like panicking or anything,
okay,
trying to lock people in. They seem pretty confident that, you know, their service, their expertise will speak for itself.
So it sounds like they're betting on their reputation and their track record.
Yeah.
To attract and keep those clients. In this, like, ever-changing landscape.
Exactly. And that decision, it really says something about how they see themselves in the industry.
Okay.
You know, they're not just reacting to the changes, they're actively positioning themselves for success later on.
That's great. Now, let's shift gears a little bit and talk about some of Prudent's other revenue streams besides mutual funds. I mean, they must be doing other stuff to make money, right?
Of course.
So what else is going on there?
Well, they get revenue from other products too, you know, like loans, bonds, alternative investments, that kind of thing.
Got it. So they're not just putting all their eggs in the mutual fund basket.
Right.
They're diversifying.
They're diversifying.
That's good. Although they did mention that their peer-to-peer lending segment's taken a bit of a hit.
Oh, right.
Because
regulation.
You guessed it, more regulatory changes.
It seems like regulations are always changing the game, aren't they?
Yeah. It's tough to keep up.
It is, but Prudent's being cautious.
Okay.
They're really evaluating these new regulations before making any big moves about their future in peer-to-peer lending.
Okay, so they're not jumping into anything.
Not yet.
They're being very careful, very measured.
Right.
All right, before we wrap up part one,
let's
touch on Prudent's cash situation.
Okay.
They have a pretty, sizable pile of cash on hand.
They do.
And some people are kind of wondering about their dividend policy. What's going on there?
It's true. You know, when a company is holding on to a lot of cash, it raises questions.
Right.
But remember, they've said they want to use this cash for potential acquisitions in the next year or two.
So they're playing the long game.
The long game. Holding on to their resources for a potentially bigger move down the line.
That's interesting.
It is, and it raises a really important question for our listeners.
Oh, yeah. What's that?
What are the potential benefits?
Okay.
And the risks, of this strategy?
I like it.
On the one hand, strategic acquisitions could help them expand their reach, their offerings, maybe tap into new markets, acquire some new technology.
Yeah.
But on the other hand, there's always that risk that those acquisitions won't work out.
Right. They don't always go as planned.
Exactly. Integrating a new company always has its challenges, and not every acquisition is successful.
Right. It's a gamble.
It is.
A high-stakes game of financial chess, you might say.
I like that. High stakes. Decisions like these can really make or break a company.
No doubt. Welcome back. So, before the break, we were talking about
Prudent's cash.
Yeah, Prudent's cash situation. And, those plans for potential acquisitions. It's a pretty interesting strategy, holding back for a big move later on.
Yeah, it definitely raises questions. Yeah. Investors are probably wondering, why not put that money to work?
Right. Be more aggressive. But it sounds like Prudent has like a vision, They're in it for the long haul.
Long game. Yeah.
Yeah. But, let's maybe shift gears a little bit.
Okay.
We've been talking a lot about Prudent.
Yeah.
What about, how does their performance stack up against the overall trends we're seeing in the Indian financial market?
Yeah, that's the key question. Remember, they're focused on retail investors. And we've seen a huge surge in retail investor participation in India recently.
So it sounds like Prudent is riding a wave that's bigger than just their own company.
Exactly. There's all these factors driving this trend.
Like what?
Well, like increased financial awareness, rising incomes, a growing middle class. contributing to this boom in retail investing.
So it sounds like Prudent is in a good spot to benefit from this.
They are. Yeah.
But there's got to be challenges that come along with that.
Of course. I mean, think about it.
Yeah.
You've got all these fintech platforms popping up.
Right.
Direct investing options.
So they're getting competition.
Big time. It's like there's a new kid on the block.
Right.
Offering a whole new way to play the game.
So it sounds like Prudent needs to kind of step up their game.
Yeah, they can't just rely on their old way of doing things.
Right.
And on the call, they did mention, their focus on technology.
Okay.
Expanding their digital offerings.
So they're embracing the fintech revolution.
They are.
Yeah.
Which is a good sign. It shows they're adapting.
Yeah.
But there's another layer to this, right?
Oh, yeah.
Think about it. Increased interest in investing. Fantastic for the market overall.
Right.
But it also means more competition.
Right. More players in the game.
More players, yeah.
So it's like a double-edged sword.
Yeah, you could say that. More innovation, but also more pressure to stand out.
So it's not enough to just be a good advisor anymore.
Right. You got to be great.
Yeah, be great.
And you got to prove your value to these modern investors.
Right. And this brings us back to something we talked about earlier, those commission cuts.
Oh, right, from HDSC and Nippon.
Yeah, exactly. How's that going to affect their ability to compete?
That's a great question.
Yeah.
Because if other AMCs follow their lead and start cutting commissions, it's going to squeeze Prudent's profit margins.
Right.
They might have to get creative.
Yeah.
Maybe change their fee structure, find some new ways to make money.
Do you think their acquisition strategy will play a role there?
Possibly. They could acquire companies that offer complementary services.
Okay.
So they can bundle their offerings together, provide more value to their clients.
So almost like give them the reason to stay.
Yeah, differentiate themselves, attract new clients in this crowded marketplace.
Right, exactly.
And if they acquire a company with a strong tech platform, that could help them keep up with the whole fintech thing.
Right. So these acquisitions could be more than just expanding their reach. They could actually be part of their plan to stay competitive.
Exactly. It all ties together.
Yeah.
The cash, the acquisitions, the market, it's all part of the puzzle.
And we, as investors or just people interested in this stuff.
Yeah.
We need to be aware of all these moving pieces to really understand where they might be headed.
Totally.
What do you think? I mean, are they setting themselves up for success in the long run?
Tough to say, for sure.
Yeah.
But, they seem to be making smart decisions.
Yeah.
They're acknowledging the challenges, the opportunities. I mean, they're not just ignoring what's happening around them.
All right. They're adapting.
They're adapting. They're looking for ways to thrive in this changing environment.
And that's a good sign.
It is.
Yeah, they're not just reacting. It sounds like they're really shaping their own future.
I agree.
Now, before we move on, I'm kind of curious about one more thing.
Yeah.
We talked about retail investors.
Mm-hmm.
But what about institutional investors?
Ah.
Do they play a role in Prudent's business at all?
That's a great point. We haven't really touched on that yet.
Yeah.
While their focus is on retail investors, institutional investors like pension funds, insurance companies, they're a huge force in the market.
Right. Okay.
So even though Prudent doesn't directly target them, they're still influenced by their activity.
Okay, I see what you're saying.
Because these institutional investors, they have a lot of sway.
Yeah.
Their investment decisions can really impact stock prices, market trends, the overall feeling,
So Prudent can't just ignore those big players.
Right, it's all connected. Their decisions can create ripples that impact the whole market.
Okay.
Including Prudent and their clients.
Wow, so it's like this whole complex ecosystem.
It is.
With different players kind of interacting and influencing each other.
Absolutely. That's what makes finance so fascinating.
Yeah.
Always changing, always evolving.
Yeah.
New challenges, new opportunities.
All right. Well, speaking of challenges, let's move on to part 3.
Okay.
Where we're going to dive into some of the risks that Prudent might face down the road. Welcome back. We're on the final leg of our deep dive into Prudent Corporate Advisory services.
It's been a pretty thorough exploration, right?
Yeah, we've covered a lot. Their financials, the ups and downs of the Indian financial market.
How they're dealing with this fast-changing industry.
Yeah, I mean, think about it. We've talked about, the rise of retail investors, the whole fintech thing.
Regulations, commissions. It's a lot.
It really is.
Yeah.
And even, the influence of those institutional investors.
Right, those big players.
Yeah, it's clear Prudent's not just sitting back and, watching things happen.
Oh, no, definitely not.
They're adapting They're trying new things.
Making moves.
Yeah, making moves to, set themselves up for the future.
Strategic decisions.
But, no business is completely risk-free.
Right.
So what are some of the hurdles? What could trip them up in the coming years?
Yeah, that's the million-dollar question. And it's something we should always be thinking about, anytime you're looking at an investment.
Yeah.
And I think one of the biggest risks for Prudent is competition.
Okay.
We've talked about how the Indian market is attracting all these new players.
Right.
You've got those fintech startups with their,
Yeah, those fancy apps.
Yeah, slick apps, robo-advisors, the whole 9 yards.
So it sounds like staying up to date, tech-wise, going to be pretty important for Prudent.
Absolutely essential. They've got to keep investing in their digital stuff, make sure what they offer is appealing to,
to like today's investors.
Exactly. And I think another concern could be cybersecurity.
Oh, yeah, good point.
As they handle more and more of this sensitive client data, security is going to be huge.
Right, because if there's like a data breach.
Oh, that could be devastating. Damage their reputation,
Totally. People lose trust.
Exactly. So it's not just about the products and services.
Right.
It's about trust. Building a secure platform.
Right. Yeah, makes sense. What else?
Well, there's always regulatory uncertainty.
Oh, yeah. Those pesky regulations.
You've seen how those can impact Prudent's business.
Uh-huh. Especially in areas like peer-to-peer lending.
Right. It's like trying to hit a moving target.
Always changing.
Exactly. And if new regulations come along that, affect their business model, they're going to have to adjust.
Yeah.
And quickly.
Makes sense. And of course, there's always the chance those acquisitions they're planning might not work out.
That's right. Not all acquisitions are a home run.
Yeah.
Integrating a new company, it can be tricky.
Right.
And sometimes those, those benefits they're hoping for, they don't always happen.
Yeah, it's a gamble.
It is. So Prudent's got to be really careful about which companies they buy and then how they actually bring them into the fold.
Do their homework.
Due diligence, yeah. They've got to really assess the risks and the opportunities before they make any big decisions.
It really sounds like Prudent's success, in the long run, depends on their ability to navigate all this stuff.
I agree. And it highlights how important it is for us to make smart decisions.
Right.
As investors or even just people who, are interested in finance. We've got to understand the risks.
Right.
Weigh them against the rewards.
Don't just get caught up in the hype.
Exactly. Do your research, ask questions.
That's what this whole deep dive has been about.
Yeah.
Exploring this company, understanding the market.
And giving ourselves the knowledge we need to make good decisions.
Exactly. So we've learned a lot about Prudent, their business, how they make decisions, their vision for the future.
Their focus on retail investors, all that tech stuff.
The acquisitions, the risks. It's been a journey.
It has.
And while we can't say for sure what the future holds, I think it's safe to say Prudent's a company worth watching.
Absolutely. Their story's not over yet.
Yeah. And they're just one part of this whole, Indian financial market story.
Right. A much bigger picture.
So as we wrap things up here, I just want to encourage everyone listening to, keep learning, stay curious.
Explore.
Yeah, explore. The financial world
it's always changing.
Is constantly changing. There's always something new to discover. Well, thanks for joining us on this deep dive. We'll be back soon with another one. Until then, happy investing.